What's up, guys? Adrian here. Welcome to episode 12 in my monthly series where I present to you my top three dividend stock picks of the month. So if you're new to the channel, welcome. In terms of investing, this channel focuses on a long-term buy and hold in dividend investment strategy. The primary objective of this strategy is to generate consistent passive income via dividends forever. So this strategy has enabled my wife and I to become financially independent in our mid-30s. So if we could do it, anyone can. So February was another good month for the stock market overall. Some ups and some downs. I think we're going into what I like to call a flat or a neutral market. So you'll have some up days, some down days, but relatively flat overall. So I think there's plenty of reasons to be optimistic with the gradual reopening of the economies around the world thanks to the acceleration of vaccine efforts. So this gives investors hope and confidence, which makes them invest more, thus driving stock prices higher. But on the other hand, the rumors and the speculation has already started about the next market crash in record time, of course. People are worried about inflation because of all the massive stimulus or quantitative easing governments have authorized because of COVID-19, which is just a fancy way of printing more money. So of course, inflation is the first negative that comes to mind, right? So what should we do? Should we save our money and wait for the next crash to invest? So time the market, or worse, be worried and lose sleep over these rumors and speculation? Forget about all that, guys. Trust me, that's all it is, noise and speculation. They do it to grab your attention, to make exaggerated headlines, so you click on the articles and you watch their TV programs. The truth is, nobody can accurately predict the stock market or when the next crash will be. So that's the advantage of my strategy. We are above all those rumors and speculation. We invest regularly, try to be as diversified as possible, and sit on the sidelines and enjoy the show, while of course collecting the passive income along the way and living our best life, because life is short and precious. So the last thing I want to ever do is worry or listen to speculation. So let's get into the stock picks. So the four criterias for my stock picks of the month are always the same. So number one, I own the stock myself because I talk the talk and walk the walk. Number two, the stock must provide a steady source of income, so a dividend or a distribution. Number three, the dividend must be relatively safe and sustainable. And number four, the stocks need to have good value. So if you invest regularly every month like I do, I think you should always try to find what's undervalued to get a little bit more yield, because something always is. So without further ado, let's get into the stock picks for the month of March 2021. Pick number one, guys, is HUTL. That's the stock symbol. This is the Equal Weight Global Utilities Income ETF. It's managed by Harvest, one of my favorite fund managers. The dividend is paid out monthly. The annual dividend is a little bit over $1.40 a share. And this ETF basically holds 30 global utilities companies. And to enhance the dividend yield, the fund manager uses a covered call strategy. So the 1 year high stock price and dividend yield, $22.58, which gave you a dividend yield of 6.22%. Pretty good. But right now, February 26th stock price and dividend yield, $17.60, so a nice discount, which translates into a nice yield of almost 8% at 7.98%. So my points and reasoning for this one is, number one, this ETF has amazing diversification within the sector and within region. What do I mean by that? Well, if you check out the breakdown here, you'll see that it might be called the utilities ETF, but which usually refers to electricity companies. But you also have telecommunication companies or telecom companies as well as pipeline companies, because pipeline companies like Enbridge, like TRP or TC Energy, Pembina, they're related to electricity generation, right? So that's why they're included. So in here you have utilities, telecom, and pipelines, which are all known to be very a lot more stable companies because their cash flows are very predictable. less volatile. I mean, everyone needs their voice and data and their electricity, right? So that it makes complete sense. So this ETF has high and very consistent monthly dividends, which is typical from Harvest. Harvest really try to give the same dividend every month all the time, which is great. This ETF also has a very low management fee of only 0.5%, which is a bit lower than your typical covered call ETFs. And what I really like about this ETF in particular, you might be saying, yeah, but what about ZWU, the BMO covered call utilities ETF? That one is great too, but that focuses only on North America, whereas HUTL, this one here, focuses all over the world. You can see the breakdown here. So of course there's United States and Canada, but there's a lot of great exposure elsewhere. Like in Europe, you have UK, Spain, Germany, some harder to reach places too, like Finland and Sweden and Norway. So you have a lot of great economies here all over Europe on top of North America. So really, really good diversification and very stable income with this one. Really a no-brainer and a good time to pick it up because you're pretty much making almost 8% dividend yield, which I think is very safe with this sector. Pick number 2 is the Gold Plus Giants Covered Call ETF. The stock symbol is CGXF. This is from CI First Asset, another one of my favorite ETF providers. The dividend is provided quarterly, not monthly, however. The annual dividend right now, this is the average, keep in mind, because the CI First Asset dividend, quarterly dividends varies all the time. So it's $1.44 per share, but like I said, this is the average for the last 4 dividend payments. So this ETF holds 15 of the biggest precious metal companies in the world, and of course, to enhance the dividend yield, it uses a cover call strategy, just like the first pick. So the 1-year high stock price and dividend yield, $17.46, so you're getting 8.25%, but a nice discount right now. So the February 26th stock price and yield is $11.45, which translates into an enormous yield of 12.58% right now. So my points and reasoning for this one, I know what you might be thinking if you follow my channel and follow all my videos. Well, hey, this is the 3rd month in a row you mentioned gold or a gold ETF, and you're exactly right. And this is because gold and gold stocks have great value right now because of the recent decline in the share prices for gold producers and a decline in the gold prices. So this ETF only holds the biggest and most reliable precious metal producers, guys. I have them listed here, all 15 of them. So there's no junior miners or penny stocks. These are really only the big boys. You'll recognize a lot of them, like Barrick Gold, Newmont Corporation. I think those are the 2 biggest ones out of all of them. So really only the big boys. And of course, we all know that gold and silver is a hedge against future stock market crashes and inflation. So it's always good to have a little bit of gold in your portfolio. Like Kevin O'Leary always says, always keep about 5% of your portfolio in gold. It's just more diversification, more safety, and of course we all know that covered call ETFs perform well during stock market crashes and volatility. So the proof is in the pudding. So what I listed here, you see it. You see the annual dividend rate next to each year that this ETF provided. And if you look at 2020, you see that it's a really nice jump. It provided $1.44, a little over $1.44 per share in annual dividends. So it's a big jump from 2019, which just proves that covered call ETFs really do perform well during volatility. And we all know why, right? It's because they sell covered call options, which become more expensive and more valuable during volatility. It's as simple as that. So this ETF, like other covered call ETFs, were designed for one thing: high income. So it's perfect to really buy and hold for the long term. So this is a great way to really get that safety in case there's another stock market crash. It's always good to have a little bit in gold. Pick number 3 is the Nexus REIT. So the stock symbol NXR.UN. The dividend payout is monthly, and the current annual dividend per share is 64 cents. So the Nexus REIT is a very small cap Canadian REIT, which recently graduated from the TSX Venture to the TSX. So really to the top stock market in Canada, if you will. It did it recently, only last month. It owns a bit of everything. It owns some retail, office, and industrial. So it's definitely a commercial commercial REIT, but it really focuses or prioritizes industrial properties, which is great. So the 1-year high stock price and dividend yield, $9.20, which translates to a dividend yield of 6.96%. Keep in mind that this is incorporating the 4-to-1 consolidation. You might have trouble by looking up this REIT where the chart might be, you won't have access to the chart before it graduated from the TSX Venture to the TSX. But luckily for me, TD actually incorporates that, which is great. So the current stock price is discounted from the 1-year high still at $8.11, which means you will get a dividend yield, if you pick it up right now, of 7.89%, almost 8%, which is fantastic. So my key points and reasoning for this one: number one, it focuses on industrial properties, which is a safer segment in the real estate sector. So you have the breakdown there. I put everything directly from their website. So as you could see, industrial, they own 39 properties, retail 22, office 14. So the focus is definitely on industrial. And with the recent graduation from the TSX Venture to the TSX, they had a 4-to-1 share consolidation, but they kept the same annual dividend percentage. So it used to be 16 cents per share. So since you got 1 share for every 4 shares, they basically quadrupled the dividend just to keep it the same rate. So 16 cents times 4 is 64 cents a share. So what I like about this one, guys, it's a growth-oriented REIT. I mean, that's the first thing you read on their website. They really focus on acquiring properties quickly. They actually recently announced the acquisition of 8 industrial properties. So they're growing very, very quickly. So because of this, I feel, this is my opinion, of course, that there's a strong chance of dividend increases with time. It's only normal. You have more and more properties, you have more and more income, so you have a bigger and bigger dividend to give out, right? Obviously, it's a really nice yield. At over 7%. It's actually almost 8%. And in terms of the payout ratio, it's well under 100%. The latest one that I've read or that I researched was from Q3 of 2020. It's 82.4%. So the dividend is sustainable for sure. And a really interesting point about this one, I want to make sure to point this out, is that this is a great candidate for the DRIP because they actually give a DRIP discount. It's a 4%. 4% is one of the highest DRIP discounts I have ever seen for a REIT. So if you don't really know what that is, well, you know what the DRIP does, right? Instead of getting your dividend in cash, it simply automatically reinvests it to buy more shares. But if you're dealing with income funds or split funds or ETFs, there's usually no discount for the DRIP. But for some single stocks and single REITs, there sometimes is a discount. It's usually 1% or 2%, sometimes 3%. But in this case, for Nexus, it's 4%, which means once the DRIP buys more shares every single month, if you have the DRIP turned on, of course, well, you get a 4% discount from the current stock price, which is great. So it just helps if you're planning on holding this long term to compound. It helps the compounding effect as you go. So a really good candidate if you want some DRIP money. 4% discount, nothing to scoff at, that's for sure. Please visit our website, guys, passiveincomeinvesting.ca, to access my first ever digital product, the Ultimate Dividend Passive Income Investing Package, which includes a huge list of ETFs, split funds, income funds, etc., and my personal comments and descriptions for each one, all the stocks you'll ever need to build your own custom portfolio. It comes with lifetime updates, so you only need to buy it once. In case a new updated version comes out, which we're planning on doing probably by the end of the year. And on my website, you could also book a one-on-one video consultation with me personally. If ever you want to ask me any questions you want, all your questions, you want me to review your portfolio, you want my help to create a brand new custom dividend portfolio for you, I will do my utmost to help you. I've met with a lot of people in the last couple of weeks. It's been really fun meeting people from all walks of life, all over the country. It's been great. And as always, please support us. Please support this channel by hitting that like button. It's free for you and it helps out the channel. So it's a win-win. And finally, make sure you're subscribed, guys, so you don't miss out on my future content and community posts on passive income investing, which is all designed to help you on your investing journey. We're all in the same journey. We're all in it together, guys. We're also on Instagram and Facebook, so follow us there if you use those. And our mission remains the same. It's to help everyday working Canadians to invest on their own in order to build their own stream of passive income, which will enhance their quality of life. So with that, take care, guys. Stay safe and see you next time.